So you want to get your head around President Trump's Liberation Day tariffs from back in April 2025.
Yeah, and their global impact. It was a big story.
It really was. We're here to help you cut through the noise. We've looked at the initial reports, the news, the economic reactions.
And our mission really is to piece together why they happened, the immediate fallout, those bigger economic shifts, and how the rest of the world took it.
Exactly, based on what the sources were telling us right at the time.
Okay, so let's unpack this. The core action was President Trump putting a baseline 10% tariff on pretty much all imports.
10% across the board.
Almost. But the really striking part, some goods, especially things coming from China, got hit with tariffs way, way higher, up to 145%.
Wow, 145%. And the stated reason.
Officially. To boost American industries, help them compete, and to tackle those trade imbalances, where the U.S. buys more from other countries than it sells to them.
Right, and the markets, they definitely noticed. Big time.
Oh, immediately.
The day after the announcement, we saw some really steep single-day drops. The S&P 500, down nearly 5%.
Which is huge for one day.
Huge. And the NASDAQ composite, even more over 6%. The Dow Jones dropped 4%, too. That kind of reaction, it screams investor anxiety.
Absolutely. And it wasn't just a U.S. thing, was it?
Not at all.
Global markets, they felt that chill pretty fast. You look at Europe, the FTSE 100 in London, the CAC 40 in Paris, both down over 3%.
Okay.
And Japan's Nikkei wasn't far behind, dropping over 2.8%. It just shows how linked everything is. These policy changes can ripple out fast.
They certainly did. Now, here's something interesting, a bit of a twist maybe. You'd think tariffs aiming to cut the trade deficit would, start doing that.
You could expect that, yes.
But in March 2025, like right before these tariffs really kicked in, the U.S. trade deficit actually jumped, hit a record $140.5 billion. What was going on there?
Yeah, that sounds counterintuitive, doesn't it? But it likely points to businesses seeing the tariffs coming and thinking, uh-oh, let's get imports in now.
Stocking up beforehand.
Exactly. Rushing to bring goods in before they got more expensive. So while it might have temporarily goosed import numbers, it also kind of set the stage for potential supply chain headaches and higher costs later on.
Right, once those tariffs actually bit. And those higher costs for companies, they usually find their way to consumers, don't they? Inflation.
Precisely. That was the concern. More expensive imported goods generally means inflationary pressure. It can squeeze people's purchasing power.
Okay. And China, obviously a main target here, they weren't just going to sit back.
No, definitely not. They responded very quickly. Retaliatory tariffs.
How high did theirs go?
On some selected U.S. goods, they slapped on duties as high as 125%.
Ouch. And the immediate effect on China's economy.
We saw a pretty immediate cooling in their factory activity. There's this key number, the Purchasing Managers Index, the PMI.
Right, measures manufacturing health.
Well, it dropped below 50, down to 49.0.
Yeah.
And anything below 50 basically signals contraction. Fewer orders, less production.
So a direct hit there. And it wasn't just the U.S. and China caught in this, right? Europe felt it too.
Oh, yes. Uncertainty definitely spread across the Atlantic. In the UK, for instance, investors started pulling money out of fixed income funds. These are usually seen as safer bets.
Okay.
They withdrew about $1.2 billion in April 2025 alone. That was the fastest rate they'd done that in 5 years. It suggests, real nervousness about where the economy was heading.
And the Bank of England.
They started openly talking about maybe needing to cut interest rates. Sort of a preemptive move, potentially, to cushion the blow if the economy slowed down because of all this trade tension.
Okay, so let's quickly recap this for you listening. We saw immediate sharp drops in stock markets worldwide, a really weird jump in the U.S. trade deficit before the tariffs hit, likely due to that import rush.
Then the prospect of supply chain issues, rising costs, inflation kicking in.
Plus, strong retaliation from China, leading to a contraction signal in their manufacturing.
And in Europe, you had rising uncertainty, investors getting cautious, and central banks thinking about stepping in. And remember, this is all the immediate stuff, the initial shockwaves reported in the sources we looked at.
Exactly. Just the very beginning of the story.
Which leads to a bigger thought, perhaps. Given these immediate, quite dramatic global shifts, what could be some of the, let's say, longer-term consequences, things maybe nobody saw coming, for international relations, or even how technology develops across borders?
A lot to think about there. Definitely food for thought.